Hello, I am Daniel Reeves. It's Thursday, 5th of March 2026. Gold and silver prices moved lower near midday Thursday as pressure from a stronger US dollar and rising US Treasury yields weighed on the precious metals market. The decline came after both metals had recorded moderate gains overnight, driven by safe haven demand linked to the ongoing Iran war, which has heightened risk aversion across the broader financial marketplace. However, those earlier gains were erased as external market factors shifted during the trading session. By midday trading, April gold futures were down sharply. The contract was last reported lower by $61.20, bringing the price to $5,073.70. At the same time, March silver futures were also under pressure. Silver prices declined by $1.598, placing the metal at $81.10. The downward movement in both metals reflects the impact of a rally in the US dollar index as well as rising yields on US government debt. A stronger dollar often makes dollar-denominated commodities such as gold and silver more expensive for international buyers, which can reduce demand and push prices lower. At the same time, higher treasury yields can make interest-bearing assets more attractive compared with precious metals, which do not generate yield. Earlier in the trading cycle, gold and silver had received support from heightened geopolitical tensions tied to the Iran war. Market participants sought safe haven assets as risk aversion increased across financial markets. Safe haven demand typically emerges during periods of geopolitical uncertainty, as investors look for assets that may preserve value during unstable conditions. That demand contributed to moderate overnight gains in both metals before the shift in currency and bond markets reversed the momentum. Alongside developments in precious metals markets, attention has also turned to a reported agreement involving the United States and Venezuela related to gold sales. According to a report published Wednesday by the news website Axios and cited by Bloomberg, the Trump administration and Venezuela's state mining company have finalized a deal that would allow the South American nation to sell a significant quantity of gold into U.S. markets. The report states that the arrangement would involve Venezuela's state-owned mining company, Minervan. Under the proposed terms, Minervan would sell between 650 kilograms and 1,000 kilograms of gold d'or bars to the commodities trading firm Trafigura. The information cited in the report came from anonymous sources said to be familiar with the matter. Under the structure described in the report, Trafigura would then distribute the purchased gold to refineries in the United States through a separate arrangement. The distribution process would therefore involve both the sale of the gold by Venezuela's mining entity and the subsequent delivery of that gold to refining facilities within the U.S. market. The reported agreement follows a meeting that took place on Wednesday between U.S. Interior Secretary Doug Burgum and Venezuela's interim president Delcy Rodriguez. According to the report, the meeting focused on discussions surrounding mining reforms and mineral extraction. The details of those discussions were connected to broader conversations about Venezuela's mining sector and the potential supply of gold to international markets. The development involving Venezuela comes at a time when global commodities markets are closely watching geopolitical tensions, currency movements, and government policy decisions. The supply of gold into international markets, particularly from major mining nations, can influence market sentiment and trading dynamics in precious metals. Meanwhile, activity in other major external markets has also been drawing attention from traders and analysts. One of the key markets influencing the broader commodities environment is crude oil. On Thursday, NYMEX crude oil prices moved sharply higher. The price rally pushed crude oil to a 9-month high, with the benchmark contract trading at approximately $79.50 per barrel. The rise in crude oil prices is another factor being monitored by market participants as they assess the overall direction of commodity markets. Energy prices can influence inflation expectations and broader economic sentiment, which in turn can affect investment flows into commodities, including precious metals. In addition to energy markets, bond markets are also playing a significant role in shaping trading conditions. The yield on the benchmark 10-year U.S. Treasury note was reported at approximately 4.148% during Thursday's session. Movements in Treasury yields are closely watched by investors because they can influence currency values, borrowing costs, and asset allocation decisions across global financial markets. For gold and silver traders, shifts in the dollar index and Treasury yields remain particularly important indicators. Precious metals often move inversely to the dollar, meaning that when the U.S. currency strengthens, gold and silver can face downward pressure. Similarly, rising Treasury yields can draw investment away from non-yielding assets, such as gold and silver. Despite the midday decline, technical analysts continue to monitor key price levels in the futures markets for signs of potential market direction. Price objectives and support and resistance levels remain central tools used by traders to evaluate the strength or weakness of market trends. As Thursday's trading session continues, investors are watching not only the movements in precious metals themselves, but also the wider developments across currency markets, bond yields, energy prices, and geopolitical events. Each of these factors contributes to the complex environment in which commodities are traded. The combined influence of geopolitical tensions, currency fluctuations, energy market movements, and government policy developments is shaping the current landscape for gold and silver markets. Traders remain focused on both immediate price movements and the broader conditions that may influence demand for precious metals in the near term. With markets continuing to react to multiple global developments, the midday decline in gold and silver highlights the sensitivity of precious metals to shifts in external financial indicators. Currency strength, bond yields, and geopolitical developments are all playing roles in shaping market sentiment as the trading day unfolds. Continuing our coverage of developments in the precious metals market, attention now turns to the technical outlook for gold futures as traders analyze price movements and key chart levels during Thursday's trading session. Technical analysis remains a widely used method in financial markets, helping market participants identify potential price objectives, resistance zones, and support levels based strictly on recent trading activity and historical price patterns. At the center of this analysis are April gold futures, which were reported lower near midday Thursday following earlier overnight gains driven by safe haven demand. As previously noted, April gold was last trading down by $61.20, placing the contract at $5,073.70. The decline followed pressure from a stronger U.S. dollar index and rising U.S. Treasury yields, which reversed earlier upward momentum. Despite the pullback during the session, technical analysts continue to outline specific price objectives for both bullish and bearish scenarios in the gold futures market. These objectives are used to identify potential price targets, depending on whether market momentum shifts upward or downward. For bullish traders, the next major upside price objective is the ability to produce a close above solid resistance at this week's high of $5,434.10. Achieving a closing price above this level would represent a significant technical development, indicating that buyers have regained stronger control of market momentum. Resistance levels in technical analysis represent price points where selling pressure may emerge, potentially limiting further upward movement. When prices move above a well-established resistance level, it can signal renewed strength in the market and sometimes trigger additional buying activity. In the case of April gold futures, analysts are watching closely to see whether prices can approach and potentially close above that resistance point of $5,434.10. Until that level is tested or surpassed, traders continue to monitor nearer-term resistance areas that could influence short-term trading behavior. The first resistance level identified by technical analysis is located at today's high of $5,204.30. This level represents the highest price reached during the current trading session so far and serves as an initial barrier for any attempt by the market to move higher. Beyond that level, the next resistance point is identified at $5,250. If gold prices move above the day's high and approach the $5,250 mark, traders would likely evaluate whether buying momentum remains strong enough to challenge higher resistance levels in the market. While bullish traders focus on the potential for upward movement, bearish traders also monitor downside price objectives. In technical market analysis, downside objectives represent the price levels that sellers aim to push the market toward during periods of declining prices. For April gold futures, the next near-term downside price objective for bearish traders is to push futures prices below solid technical support at $5,000. Support levels represent price points where buying interest has previously emerged, potentially preventing further price declines. If the market were to break below the $5,000 level, it would represent a move beneath a major psychological and technical support area. Such a development could draw additional attention from traders monitoring market momentum. Before reaching that level, analysts are observing several intermediate support areas that could influence the market's path during ongoing trading activity. The first level of support is identified at this week's low of $5,005. This level marks the lowest price reached earlier in the current trading week and represents an important point where buying interest previously appeared. If the market moves below that level, the next support area is seen at $4,900. This price level represents another key technical threshold where traders may evaluate whether the market finds renewed support or continues to move lower. In addition to resistance and support levels, analysts also reference a technical indicator known as the Wyckoff Market Rating when evaluating the overall strength of a futures market. The Wyckoff Market Rating provides a numerical assessment of the technical position of a market on a scale from 1 to 10. A rating closer to 10 indicates stronger bullish technical conditions, while a rating closer to 1 suggests stronger bearish conditions. For April gold futures, the Wyckoff Market Rating currently stands at 7.0. This rating indicates that despite the midday decline in prices, the gold market continues to hold a generally stronger technical posture from a broader perspective. A rating at this level suggests that bullish forces still maintain an advantage in the overall technical structure of the market, even though short-term price movements may fluctuate. Market participants frequently use such technical ratings in combination with price levels to assess potential trading strategies. While technical analysis does not predict future events, it provides a structured framework for evaluating how markets are behaving based on current price patterns. Thursday's market activity therefore presents a mixed technical picture. On one hand, the decline in gold prices during the session reflects pressure from external market forces, including the rally in the US dollar and rising Treasury yields. On the other hand, the technical rating suggests that the market still retains underlying strength when viewed within the broader trend. Traders remain attentive to the interaction between these factors. Movements in currency markets, bond yields, and geopolitical developments can all influence short-term price action. At the same time, established support and resistance levels continue to guide trading decisions across futures markets. As the trading day continues, market participants are closely observing whether gold prices approach any of the key resistance levels outlined in the technical analysis, including today's high and the next resistance zone at $5,250. Similarly, they are monitoring whether prices move toward the support levels identified at $5,005 and $4,900. The balance between these price levels will help determine whether the market maintains its broader technical strength or shifts toward further downward pressure in the near term. In futures trading, these levels often act as reference points for both short-term and longer-term market participants. In addition to gold, silver futures are also being closely examined by traders using similar technical frameworks. The silver market has experienced its own set of price movements during the current trading session, and analysts are identifying key objectives and levels that may influence its direction. Turning now to the silver market, traders are closely monitoring the technical outlook for March silver futures as price movements continue to reflect broader conditions across financial markets. As reported earlier, silver prices declined during Thursday's trading session following pressure created by a stronger US dollar index and rising US Treasury yields. These external market developments contributed to the reversal of earlier gains that had been supported by safe haven demand connected to geopolitical tensions. By midday Thursday, March silver futures were reported down by $1.598, bringing prices to $81.10. The decline came after moderate overnight gains had been recorded in response to elevated risk aversion in the marketplace. However, the rally in the US dollar and higher Treasury yields shifted market momentum and weighed on the precious metals complex. As with gold, technical analysis plays a central role in how traders evaluate the direction of the silver futures market. Analysts examine chart patterns, resistance levels, support zones, and price objectives to assess the balance between buyers and sellers. These technical indicators help market participants identify potential scenarios for future price movement based strictly on observed market behavior. In the case of March silver futures, technical analysts have identified a key upside objective for bullish traders. The next major price target for bulls is the ability to achieve a closing price above solid technical resistance at this week's high of $95.86. This level represents the highest price reached during the current week and serves as a significant resistance point in the silver market. A close above $95.86 would indicate that buyers have succeeded in overcoming a major technical barrier. Such a move would suggest stronger upward momentum and could signal that the market is attempting to extend its rally beyond recent price ranges. Resistance levels such as this are important reference points in futures trading. When a market approaches resistance, traders often evaluate whether selling pressure emerges to prevent further gains. If resistance is broken, however, it can signal increased buying interest and potentially open the path toward higher price levels. While the longer-term upside objective remains the weekly high at $95.86, analysts are also identifying nearer-term resistance areas that may influence trading activity in the current session. The first resistance level for March silver futures is located at today's high of $84.15. This price point represents the highest level reached so far during Thursday's trading session. If silver prices move higher and approach $84.15 again, traders will watch closely to determine whether the market has enough momentum to break through that level. A move above today's high could lead the market toward the next resistance level, which is identified at $85. The $85 level therefore serves as another important threshold for traders assessing potential upward movement in silver prices. If prices move above this level, market participants would evaluate whether buying strength continues toward higher resistance zones. At the same time, bearish traders are also monitoring downside price objectives in the silver market. In technical analysis, these objectives represent the price levels that sellers aim to reach if downward pressure continues. For March silver futures, the next downside price objective for bearish traders is a closing price below solid support at the February low of $71.815. This level represents an important historical support area within recent trading activity. A close below that level would indicate a significant weakening of the market's technical structure. Before reaching that longer-term downside objective, analysts are focusing on several intermediate support levels that may influence price action in the near term. The first support level for March silver futures is identified at this week's low of $79. This level represents the lowest price reached during the current trading week and serves as an immediate support point where buying interest previously appeared. If prices move below the $79 mark, the next support level is seen at $77.50. This price level represents another area where traders will evaluate whether the market stabilizes or continues to decline. Support levels such as $79 and $77.50 are closely watched during periods of market weakness. When prices approach these levels, traders look for signs of renewed buying interest that could halt or slow further declines. In addition to resistance and support levels, analysts also evaluate the overall technical condition of the silver market using the Wyckoff Market Rating. This rating provides a numerical measure of a market's technical strength on a scale from 1 to 10, with higher numbers indicating stronger bullish technical conditions. For March silver futures, the Wyckoff Market Rating currently stands at 5.0. A rating at this level suggests that the silver market is presently in a more balanced technical position compared with gold. It indicates that neither bulls nor bears hold a decisive advantage at this time. This neutral technical rating reflects the mixed influences affecting silver prices. On one hand, the earlier safe haven demand connected to geopolitical tensions supported prices. On the other hand, the strengthening US dollar and rising treasury yields have applied downward pressure on the market. As a result, traders are carefully watching the interaction between these external market forces and the technical price levels identified in the futures charts. The direction of the silver market in the near term may depend on whether prices move toward resistance levels above $84.15 and $85, or toward support levels near $79 and $77.50. The broader financial environment continues to influence trading decisions in both gold and silver markets. Movements in currency markets, shifts in treasury yields, developments in energy prices, and geopolitical tensions all contribute to the context in which precious metals are traded. At the same time, technical indicators remain essential tools for traders seeking to understand how markets are responding to these broader forces. Resistance levels, support zones, and price objectives provide structured reference points for evaluating potential market scenarios. As Thursday's trading session progresses, market participants remain attentive to how these technical factors develop within the silver futures market. Whether prices approach resistance or support levels will help determine the short-term direction of silver trading. As we conclude this report, we recap the key developments shaping trading activity in the precious metals markets during Thursday's session. Gold and silver prices moved lower near midday, reversing earlier gains that had been supported by safe haven demand. The shift in momentum followed a rally in the US dollar index and rising yields on US Treasury securities, two external market factors that frequently influence trading conditions for precious metals. During the session, April gold futures were last reported down by $61.20, placing the contract at $5,073.70. At the same time, March silver futures declined by $1.598, bringing prices to $81.10. Both metals had earlier posted moderate overnight gains as market participants sought safe haven assets amid geopolitical tensions linked to the Iran war, which has increased risk aversion across the broader marketplace. Safe haven demand often emerges during periods of geopolitical uncertainty, when investors move toward assets traditionally viewed as stores of value. That dynamic helped support precious metals earlier in the trading cycle. However, as the session progressed, movements in currency and bond markets shifted the direction of trading. The US dollar index moved higher during the day, strengthening the US currency against other major currencies. Because gold and silver are priced in dollars, a stronger dollar can make these metals more expensive for buyers using other currencies. This can reduce international demand and place downward pressure on prices. At the same time, yields on US Treasury securities also moved higher. The yield on the benchmark 10-year US Treasury note was reported at approximately 4.148%. Rising Treasury yields can influence investor behavior because they increase the return available from interest-bearing government securities. Precious metals, by contrast, do not generate yield, which means that higher bond yields can reduce the relative attractiveness of holding gold or silver. Alongside these developments in currency and bond markets, attention has also focused on a reported agreement involving the United States and Venezuela related to gold supply. According to a report published Wednesday by the news website Axios and cited by Bloomberg, the Trump administration and Venezuela's state mining company have finalized a deal that would allow Venezuela to sell gold into U.S. markets. The report indicates that the arrangement would involve Venezuela's state-owned mining company, Minervan. Under the reported terms, Minervan would sell between 650 kilograms and 1,000 kilograms of gold d'Or bars to the commodities trading firm Trafigura. The information cited in the report came from anonymous sources described as familiar with the matter. Following the purchase, Trafigura would then distribute the gold to refineries located in the United States under a separate arrangement. This structure would allow the gold produced in Venezuela to enter the U.S. refining system through a commercial trading channel. The report of the agreement comes after a meeting held on Wednesday between U.S. Interior Secretary Doug Burgum and Venezuela's interim president Delcy Rodriguez. According to the report, the meeting involved discussions related to mining reforms and mineral extraction. These discussions were connected to broader conversations regarding the development of Venezuela's mining sector and the supply of mineral resources. The reported deal represents one of several developments occurring within the wider commodities environment. Markets are currently responding to a range of factors, including geopolitical tensions, energy price movements, currency fluctuations, and policy discussions related to natural resources. Another key external market influencing the commodities landscape is crude oil. On Thursday, NYMEX crude oil prices moved sharply higher. The benchmark crude contract reached a 9-month high, trading at approximately $79.50 per barrel. Movements in energy markets are closely monitored by investors because energy prices can affect inflation expectations and broader economic conditions. These broader market forces interact with the trading activity seen in precious metals markets. As a result, traders and analysts often evaluate both fundamental developments and technical indicators when assessing potential market direction. In the gold futures market, technical analysis continues to highlight several important price levels. Bullish traders are focused on the possibility of achieving a closing price above solid resistance at this week's high of $5,434.10. A close above that level would represent a significant technical development, indicating stronger upward momentum. Before reaching that objective, traders are watching nearer-term resistance levels. The first resistance level is identified at today's high of $5,204.30. The next resistance point is seen at $5,250. On the downside, bearish traders are watching the support level at $5,000. A move below that level would represent a break beneath an important technical threshold. Additional support levels are identified at this week's low of $5,005 and then at $4,900. Technical analysts also reference the Wyckoff market rating when assessing the gold market. April gold futures currently hold a Wyckoff market rating of 7.0. This rating indicates that the gold market maintains an overall stronger technical posture, suggesting that bullish forces continue to hold an advantage in the broader market structure. In the silver futures market, technical indicators present a more balanced outlook. The next upside price objective for bullish traders is achieving a close above solid technical resistance at this week's high of $95.86. Nearer resistance levels include today's high of $84.15 and then the $85 level. For bearish traders, the next downside price objective is a closing price below solid support at the February low of $71.815. Closer support levels are identified at this week's low of $79 and then at $77.50. The Wyckoff market rating for March silver futures currently stands at 5.0. This rating indicates a more neutral technical position, suggesting that neither bullish nor bearish forces currently hold a clear advantage in the silver market. Taken together, the developments observed during Thursday's session illustrate the complex interaction between geopolitical events, currency movements, bond yields, energy markets, and technical trading indicators. Each of these elements contributes to the overall environment in which gold and silver prices are determined. As markets continue to respond to global developments, traders remain attentive to both immediate price movements and the broader indicators shaping market sentiment. The direction of the US dollar, the level of treasury yields, geopolitical conditions, and technical price levels will continue to play a central role in guiding activity within the precious metals markets. This concludes our report on the latest developments in gold and silver trading. Thank you for watching.